It's 2010 and you're a pizza seller. But the customer pays you with Bitcoin. A customer places an order, but instead of paying with dollars, they offer you 10,000 Bitcoin. At that moment, without thinking, you accept. And today, those same Bitcoins would be worth more than $600 million. How did this happen? How did a digital currency created by an unknown person become one of the most profitable investments in history? This is the story of Bitcoin. The beginnings. For centuries, money has evolved from stones and precious metals to banknotes and accounts. But with the arrival of the digital age, a big question arose. Can we have decentralized money that does not depend on banks or governments? But what does decentralized mean? Unlike dollars or euros, which are controlled by central banks, Bitcoin is based on a global network of computers. Anyone can participate in the network, and transactions are verified by users called miners. To understand the origin of Bitcoin, we have to travel back to 2008. The world was in chaos. The financial crisis hit banks. Millions of people lost their savings, and trust in the financial system collapsed. It was at that moment that someone, under the pseudonym Satoshi Nakamoto, decided to change history. On January 3, 2009, Satoshi Nakamoto created the first block of the Bitcoin blockchain, known as the Genesis block. Within this block, he left a hidden message. The Times March 1, 2009 Chancellor on brink of second bailout for banks. This message referred to the financial bailout of banks by the British government. It was a declaration of war against the traditional financial system. Over time, Bitcoin began to gain notoriety. Its price reached $1 for the first time in 2011, and other cryptocurrencies like Litecoin were created. But not everything was positive. Bitcoin became the preferred currency of the dark web. In 2011, a site called Silk Road allowed the purchase of drugs and other illegal products with Bitcoin. This made Bitcoin seen as criminals' money. In 2013, the FBI shut down Silk Road and arrested its founder, Ross Ulbricht. The price of Bitcoin dropped, but the technology behind it continued to evolve. 2017, Bitcoin became a global phenomenon. Its price went from $1,000 to $20,000 in just 1 year. The media spoke of overnight millionaires, but also of bubbles. And in 2018, the bubble burst. Bitcoin fell to $3,000. The euphoria led to a speculative frenzy. ICOs, initial coin offerings, multiplied. Thousands of new cryptocurrencies appeared, and people invested without really understanding how it worked. But history has shown us that everything that rises quickly can also fall quickly. And so it happened. 2020 to 2021. The Renaissance. Starting in 2020, the landscape changed. The world was in the midst of a pandemic. Central banks were printing money at unprecedented levels, and inflation began to worry investors. It was then that Bitcoin went from being considered a speculative asset to becoming a store of value for large companies and institutions. Giants like Tesla and MicroStrategy announced massive Bitcoin purchases. PayPal allowed its users to buy and sell cryptocurrencies on its platform. Investment funds began to include it in their portfolios. All this led Bitcoin to its all-time high of $69,000 in November 2021. Currently, the price of Bitcoin is very close to $100,000, reaching its highest peak. What future do you think awaits Bitcoin?